All right. Hey there, everybody. Good morning. Welcome back to G&G Live, the live webinar with the attorney of the G&G Law and some of our friends to talk about issues that are important to you. I'm joined here today with our founder and owner, Michelle Green, as always, familiar face on G&G Live, and also a great friend of ours who's been working closely with us in these last couple of months, Jennifer Brugh. She's a tax attorney, owner of JRB Law, LLC, and knows a lot about the topic today, which, as you might have guessed, is S corporations. This is a topic that
And
we
she's
get,
of counsel at
and
G&G
she
Law,
is an attorney of counsel.
importantly.
Yes, she's been helping us out a lot with our client work, and has been an absolute lifesaver in these last couple of months. So the topic today, S corporations, it's a kind of business structure we get asked about a lot, but it's a little bit more complicated than you might think. And that's why we have Jennifer here, because she knows all about it. Now, a couple of things first. This is being pre-recorded so we can broadcast it later. You can still interact, comment down in the post, comment down on the video. We'll see it, I'll respond, we'll get back to you, start a conversation. Secondly, this video is, of course, for educational purposes only. What we say isn't going to be tailored to any specific business, especially as laws change. We can't guarantee the accuracy of the information here. This video and watching it doesn't create an attorney-client relationship, and as such, there's also no attorney-client confidentiality. So just to be aware of that as you go forth and comment below with all of your questions. With that, I am going to turn it over to the people with the knowledge. Michelle and Jen, take it away.
Thanks, Ian. Good intro as always. So I wanted to do this S Corporation live stream because I'm so excited that Jen is part of the G&G Law team now because she's an amazing attorney. And on top of that, she's a tax attorney. And during all of my conversations with clients, I always have to say, I'm not a tax attorney. I can't give tax advice, but Jen knows this stuff inside and out. And S corporations is one of the first topics we want to bring Jen on to talk about because it's one of the first biggest tax decisions most entrepreneurs and small business owners make when they're starting a business. And when it comes to that big, should I be taxed as an S-Corp decision, I understand this entrepreneur's confusion in this picture on a deep level. Back when my partner and I first started making a little bit of money with our other business, Next Step Test Preparation, so separate from the law firm, that was a tutoring company, we started to evaluate whether we should be taxed as an S-Corp. And pretty much every financial planner or accountant, this was something they brought up to us. The other option, instead of being taxed as an S-Corp, would be to continue to be taxed as a pass-through partnership, which is what an LLC defaults to if you don't make a separate tax selection and you have multiple members. At the time, I had just started G&G Law too. And like I said, I'm not a tax attorney, but I was talking to a lot of accountants, and I would ask every single one of them what type of how we should be structured tax-wise as an S-Corp. Every financial planner, any professional we met with. Finally, we decided it was worth the hassle of setting up salaries for ourselves, getting a payroll system set up, and being taxed as an S corporation. And then like 10 years later, when we sold the business, the attorney that we were working with when we were selling, we had to do this complicated F reorg. And he said, I don't know why you would ever have set up as an S corporation in the first place. This is too complicated. And honestly, my takeaway from that experience is that while there are often clear-cut tax advantages to being taxed as an S corp, sometimes I feel like the decision is something people put a lot of time and energy into, and it's really 6 of one, half dozen of the other. Sometimes business owners spend more time and energy on the decision-making process than the decision warrants. But the fear of doing something wrong when you're a business owner, that fear is so real. And I think this is where you're just starting out and it comes into play. which is why I'm so excited to talk to Jen about it and get her perspective on S-Corps and when she feels they're appropriate and whether she thinks it's a life or death decision. Um, and she'll give us some clear direction about how to go about making that decision and understanding what it means in the first place, because there's a lot of confusion out there about S-Corps and what they are. So now I'm going to turn it over to Jen and ask her some questions that we set up for her. So to Jen, first question for you, just at a basic level, what is an S-Corp?
So, an S-Corp is a tax designation. This is about making a tax election with the IRS. And you can be, as an S-Corp, you can be an LLC, a PLLC, and still be an S-Corp at the same time. Like those are separate entities. There is no tax election for LLC, PLLC. If you are a smaller corporation, you can make the S-Corp election. Big corporations, C-Corps, cannot be an S-Corp. They're a separate type of entity. So it's basically you get to take on the advantages of C-Corp, you know, that liability protection and the shield between your personal and business. But you get taxed as a flow-through entity and it goes directly to the members or partners.
Okay. So when clients come to me and say, should I be an LLC or a S corporation? That question is kind of nonsensical.
It is, because you can be both. LLC is a state designation, not a tax election.
Good to know. So next question. When can that S corp taxation save you money? So when should you make that election?
Okay, so this is going to depend on how much you're earning. So this is going to be different for every type of business industry. You know, if you're a retail versus a restaurant, it's just going to be different on when this becomes beneficial to you. Some things to take into consideration is going to be how much you're paying in taxes between the self-employment tax and your regular income tax as a sole proprietorship versus what it's going to cost you on the S Corp side, because you have to add in payroll and the payroll taxes for the business, which are deductible for the business. So there is some advantage there. But you add those expenses for the payroll, and are those more or less than you're paying in self-employment tax? Because as an S Corp, you don't pay self-employment tax, you get paid wages. Because if you have an S corporation, you are required to pay yourself wages. Something a lot of people don't know and get in trouble for. So you're going to pay yourself in wages, and then whatever's left at the end of the year for the business as far as net income, that flows to the owners as a distribution. And distributions are not subject to self-employment tax. They are taxed as ordinary income.
All right. So if you're a pass-through entity like an LLC, any money that you make that flows through to you is taxed, has self-employment taxes applied to it.
Correct.
But if you have an S corporation set up, anything that's profit beyond your W-2 wages, you don't need to pay that because it's classified as distributions. Is that right?
Correct.
Okay. And then are there numbers? Because I've asked a lot of accountants this, and I think these are the numbers I've heard and I'll just throw out there. So it's kind of like, don't even think about S Corp taxation unless you're making at least $50,000 a year. And then I've also heard that the sweet spot is if you're making around 6 figures a year.
Yeah, there's no exact number because it really depends on your business and what your expenses are like. At 50,000, I would say it's almost never beneficial to go S Corp. You're probably going to pay more between payroll services and all of that than you're going to offset from the self-employment income. So there's no clear-cut number. It really depends on your business, on what type of payroll service you're going to use, which always use a payroll service. Don't do it yourself.
Yes, good tip. I love our payroll service, Gusto. They do so much. Yeah, so don't even think, that's kind of nice to know though. So don't even think about it. It's not a consideration at 50,000
No,
until you're
no.
beyond that.
And I would say, like, if you're even thinking about it, have your accountant or your tax attorney run the numbers so they can get a cost comparison on if you're spending more by paying it in a self-employment tax, or if you're going to spend more setting up and running with a salary for an S-Corp.
So
Because you have to consider that in addition to like paying a payroll service and dealing with the payroll taxes, you know, that adds like 6 forms a year you've got to file minimum for your taxes, because you have to file your 4 quarterly payroll returns, your end of the year 940, which is for the federal unemployment tax, and then you have to file the S-Corp's return.
Mm-hmm. Yeah, so this is a good segue into what is the downside. So what's the downside of setting up an S-Corp?
Oh, that's a big, long list. Michelle, you know I don't like S-Corps. I think they're almost never good for small businesses. But you have a lot of formality required with S-Corps. I mentioned that you have to pay yourself a salary. The owners of an S-Corp all have to be paid a reasonable salary. And there's not a lot of clear law on what reasonable means, but it's basically what you would earn doing your position for someone else. You have to have bylaws for the S Corp. You have to have regular meetings, and they have to actually be held. And you have to keep minutes from those meetings. I mentioned, you know, that you have to file the informational return each year, which involves filing a 1120S along with issuing K1s to your owners so that they can report their taxes. You have to set up payroll processing. I mentioned before, don't do that in-house. It's terrible to do yourself, but you either have to have someone in-house doing it, or you have to pay a payroll service to do it. And then, you know, we already talked about like determining what is a fair salary can be really hard, especially the first couple of years in business. Because let's face it, when you launch a business, you have no idea how those first few years are going to go.
Yeah, we had a whole analysis done when we, with our other company, started being taxed as an S corporation about what would be what is the most reasonable but lowest fair salary we can use.
Yes, and that's usually what people are looking for in those first couple of years is reasonable, but the lowest I can get away with, because you know, if you can't meet the payroll, it's a problem.
Right.
One upside to all that formality that I do want to mention with S corps, if you are a business that is planning on like taking on investors, all that hassle may be worth it, because investors love all that formality and reporting, because they can see more information about your business in black and white.
That's a good point. All right, so now the nitty gritty. How do you elect S Corp taxation?
Okay, so this is actually pretty simple. You need to file a form 2553 with the IRS. And it's basically just a fill in the blank form where you give them your business's name and some more details about it, and tell them that you want to be an S corporation. Assuming, you know, the form is correct and everything, you get a letter in the mail that says you're now an S corporation. However, the time period to send it in,
yeah.
that's where it gets
The complicated part. What is the
yes.
timeline?
So you have 2 months and 15 days from the start of your calendar year. So if you open your business in the middle of the year sometime, your calendar year has started right there. And so you have 2 months and 15 days from the day you incorporate your business to make it an S corporation. You can, let's say you don't do it that first year and you go ahead and stay a sole proprietor, flow through LLC. The next year, your calendar year starts in January. You have 2 months and 15 days to make that election. So you can do this down the line, 3 years into your business, 4 years into your business. If you miss that deadline, but you desperately want to be an S Corp for some unknown reason, they did create a process that's a little convoluted, where you have to like fill in an extra form and basically write an apology and send it in, and you can get it backdated to be an S Corp for that calendar year. But that's kind of a hassle. You have to, if you're going to do that, you want to see a tax attorney to have them do it, because if you don't have very specific language on the letter that you send, they won't approve it.
Yeah. That was one of the first things that Jen did for one of our clients. And I didn't know that it was possible. I was so impressed when she got the S-Corp election to go through after the due date. So it is possible, but if you know you want to be taxed as an S corporation, do it within that window.
Yes.
It's much easier. That was it for that. Anything else that we missed or you wanted to add about S corporations, Jen?
Don't do it. No. There are cases where it's good, but my preference is the sole proprietor until you get big.
Sole proprietor or partnership, I think, and not too big. So I think that's kind of missed. I think that I've heard, at least, that if you're making tens of millions of dollars, the benefits sort of go away too, maybe. But at that point, you can definitely afford to do the calculations.
Yeah, and it has to get pretty high up there. I've had clients that were making a substantial amount of money, and it was still not beneficial to go S Corp. But if you get too big, then you might want that extra little liability in there.
Mm-hmm. Yeah. Well, thanks. Feel free to put any other questions that you have about S corporations in the comments, and we'll try to address them. And also let us know in the comments what you want us to cover in future live streams. We do this for our clients to make legal services accessible for small businesses. So we're listening, and we want to know what you want to learn about.
Absolutely. Seconding everything that Michelle and Jen just said. Wonderful presentation, as always. I think that just about covers it. Or you can drop your comments and questions in the comments below this video, or you can message us on Facebook. You can reach out on our website. And we would love to hear from any and all of you. So thank you all for watching, and I hope you have a wonderful afternoon.